in the chat if you can hear me just fine. I'm Sunny Harris. Today we're going to be talking about maximizing profits with moving averages. Moving averages have a bad reputation, and I'm going to show you what I've done to modify them so that they actually do work and are profitable. Just a little bit about me. I am one of the TradeStation specialists, easy language specialists. I've used TradeStation and its predecessor since 1985. And other programs I've used over the years are Metastock, MasterChartist, Vantage Point, Genesis Navigator, TC2000 Multicharts, a new one, brand new one called Build Alpha, which lets you design trading systems without any coding, and Advanced Get, eSignal, NinjaTrader, and lots more. I think I've just about tried them all. Oh, and MetaTrader. My indicators and strategies that I use on my everyday charts are bean ticks, my dynamic moving average, sunny bands, the PHW, the CPC index, and red light, green light, and PB paint bar day sessions. So bean ticks is wonderful. I can hear what the market's doing without looking at a chart. It makes a bing sound when the market moves up a tick, and it makes a bong sound when the market moves down, and a click when it moves sideways. My dynamic moving average is a moving average, but I have coded it so that I've used my degrees in math to smooth it out so that it avoids most of the whipsaw. Nothing can avoid all the whipsaw, but it does a real good job of avoiding most of it, which I found when I was a young trader years ago, that was the thing that killed me. Every time I'd make money in trends, I would lose it in sideways. So this gets rid of that problem. Oh, sunny bars also are interesting. And I'll tell you about all these. Just give me a call and I'll tell you what they all do. But these are the things I use every day. Sunny bars is volume weighted bars so that the width of the bar increases as the volume increases. Pennant Finder real quickly shows me all the congestion areas. Today we're going to compare and contrast simple moving averages, exponential moving averages, Bollinger Bands, Keltner channels, and my sunny bands. And we're going to look at where the profits are. I've been trading for 40 years, a little over 40 years, and I've developed many strategies, both for myself and for clients. So I've been around the block. I know what works and what doesn't work. And I also developed testing methodologies in my book, Trading 102, that have stood the test of time and have become the de facto standard in the trading community. I'm going to share some of my more profitable trading concepts, and at the end, some of my proprietary trading indicators. My degrees are in mathematics. I've been trading since 1981. I was rated #1 trader by Stark Research 2 years in a row. I've been programming and testing since 1981. As an aside, programming and testing in 1981 amounted to a piece of graph paper and Investor Business Daily every morning over breakfast. And I've been teaching others to trade since 1986. These are the books that I've written: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, and TradeStation Made Easy. This Using Easy Language 9.x is a book that I edited with my friend Murray Ruggiero. So that was sort of added in there. And I'm working on one called Grading the Gurus, where I take the notable gurus' strategies and reveal them in the book and test them to see if they actually work. If you want to see a list of my appearances in past and present and a list of all my published articles, just go to moneymentor.com and click on seminars and then editorial. You'll see all my information there. Clearly, moneymentor.com is my website. So now we're going to talk about how to make money trading, the steps you need to take, the indicators I use, and the strategy that I use. And the indicators and the strategies that I use are years in development. And it's 40 years of me finding out what works and fine tuning it along the way. Not everyone can trade the same system. What's good for the goose is not necessarily good for the gander. I like 1 minute bars and you might like daily bars. You might not want to sit in front of the computer all day like I do. Your system must be configured for your personality. So let's talk about how do you find your time frame, daily or 1 minute or weekly or whatever that might be. Before you find the time frame, you must find the right instrument. For instance, bonds have a rhythm of 45-minute swings, and the S&P has a rhythm of 15-minute swings. Currencies swing on a daily chart, and mutual funds swing on a weekly chart. So you have to decide the right rhythm for you and the right instrument for you. And it's based on your personality and your home life. You know, your wife may not want you trading all day long. These are charts that show the cycles. You can see the cycles as they develop on these charts. That's the E-mini. This is IBM. You can see there's different cycles on that one. And then I don't even remember what this one is. JFATX weekly on the NASDAQ. So you don't tell the market what you want to trade. You let the market tell you where the money is. Starting with screening the larger markets, the Dow, the NASDAQ, S&P, and the Russell, you can find stocks that, if you query it right, you can find stocks that have the highest return. You can find the cycles in the stocks. I have, of course, tools to help me do this. The things that I have available, I can also teach you how to do yourself. So if you don't want to buy mine, you can be taught how to do it yourself. So you look at the time frame. You must consider your own personality. I have clients who want to only trade in the first 2 hours, who only want to trade near the close, and who want to place a trade and walk away. Oh, and I've got clients that do mutual fund switching. So it's all unique. You must consider your time frame, your time constraints, the universe of symbols, and you must ask yourself, where's the money? If you can't make more than $14 an hour trading, you should be working at McDonald's. So where is the action? We're looking for that, and we're asking the question, what is true? Which I go into more in depth in my book, Trading 102, Getting Down to Business. This is from TradeStation. It's a radar screen. It looks like a spreadsheet. You put the stocks down one side, and then I've got what I call my PHW indicator, stands for potential hourly wage. So we can tell just how much money you would make and compare symbols to each other so we know what actually works. So I can sort this by the highest PHW, and which is sorted that way right here. And then I've got another indicator that I call red light, green light. It shows, well, all these are short right at that point in time, but it'll show a green long or a red short, depending on which direction the market's moving, short term, medium term, and long term. This in yellow, I've highlighted the PHW so you can see, oh, here you can see a couple long green longs on the red light, green light indicator. The yellow shows the PHW, and it's sorted there by highest to lowest. So you might not want to pick the highest one, but you might want to pick something that's medium range so that you can have room for something to be tradable. A stock with a high PHW is tradable. A stock with a low PHW is an investment. So PHW, as I said, stands for potential hourly wage. So I can tell if I need to work at McDonald's or not. It only makes sense to trade if you can make money doing it. Some people trade for the challenge. Some people trade for the excitement. Those people lose money. Here's Sprint Nextel Corporation. You see it's flat on this scale. I've got the yellow dots that show me that the PHW dots. They show me the ideal turning points. And then this is Google that shows you there's lots of tradable room in here. So You know, this goes from 630.85 down to 553.31. Plenty of points in there to make money. You might want to do a screen capture here. This is my filter by price and volume. This is easy language or multi-charts code. It just basically says I want to have the volume over a certain amount and the price within certain constraints, because I don't want to trade a $500 stock when I can trade a $35 stock, for instance, if it has adequate volume. And those are inputs that you can tell it. So you can see the result of this filtering by price and volume. The blue areas meet our criterion. And I think in this, I put from, what did I put? From $10 up to $50, I think is what I put. And then the volume. So I wanted over 1 million shares per day. So the blue ones are the ones that meet the criterion, and you can look to the left then and see which stock it is if you're trading stocks. I actually trade stocks in a long-term portfolio, and I trade the E-mini on a 1-minute chart. So you put in your symbol list, you insert the PHW indicator, you sort, you select the symbols within your price filter that have the highest PHWs. And in stock that I would want to trade must meet both filters. And here you can see the PHW indicator on the right, like that, and the price filters to the left of it in blue and red. So you always ask yourself, how much is enough? You know, is 10% a good profit to make? Is 30%? Is 100%? How much profit can you make? Do you know whether your test or your strategy generates enough profit? I always tell people that the average retail business will make 10% profit per year. So if you're doing better than that, you're doing really well. I used to subscribe to a list of 2,000, well, they were hedge fund managers now, but trading advisors. And I found that if you add all the losers and winners together, you come up with an average winning rate percentage of 0%. If you take out the worst half and leave the best half at the top, then those people make 10% per year. And if you take out half of that, so you're ending up with a quarter, those people make 30% per year. So it really depends on whether you're one of the best or not, whether you're going to make 30% per year. And the reason I tell you that is because if you're making 30% per year, you're doing really well. And most people think, oh no, I have to make 100% per year. So now we're going to ask what is true again. And I go into what is true a lot in my Trading 101 and 102 books. So what is possible? And there we go. Should your chart generate $500 or $500,000? You don't know unless you put PHW on it. Don't just trade something because you feel like it. I gave a seminar once where one of the guys was a farmer from the Midwest, and he said, I've got to trade corn and beans. I got to trade corn and beans. And I said, why? He said, because that's what I farm. Well, that makes sense. But what if he could make a whole lot more money trading the S&P? I mean, why should he hedge his corn and beans if he could make double that trading the S&P, and then he wouldn't have to worry about hedging it? How much is enough? Problem has always perplexed me until I invented the PHW indicator. It works on any chart, any time frame, and any symbol. And this is what it looks like with the dots. So you can see it gives you the buy and hold profit, 3,000, the ideal profit, 7,900. The PHW profit is 47.86. How did I get that? That's by taking all the ideal trades. For instance, here's one at 21.85. The short trade, and it stops out at 16.26. So you get the points for each of those moves, and then you multiply it by 0.6, because there's no way you're going to get it in the beginning of every trade and out at the end of every trade. You can't pick tops and bottoms. You just can't do it. So if you take 60% of it, that means you're giving away 20% at the beginning of the move and another 20% at the end of the move. So you've kept 60% of it. It tells you the ideal trades of 69. So you know just how many trades you should be making. This is probably the most important indicator in all of my work because it really tells you where you should be spending your time and your money. You know how much is enough, and you need to know, does your system match the dots? I keep the dots on my trading charts so I can see how close my actual trading comes to the dots, which are the perfect trading. This one is the PHW indicator at a higher retracement percent. And you can see there's way too many dots on this. Doesn't make sense to be trading that much on a daily chart and having all these, especially during this sideways period right here. You don't want to be trading during that at all. You really want to be standing aside or holding the previous position. To see how much is enough, you give the chart the space to the right and you can see the words clearly. Oh, this is something I'll give you for free too. This is a system that I call the perfect system. It has no losing trades. Its average trade is 46.60, and the net profit is $279,000. And there's the code for it. That's the perfect system. If you want to screen capture that, I'll leave it up for just a second for you while I take a drink of water. Okay. So you find your symbol. Now what are we going to do? Let's start looking at some moving averages. Simple, exponential, Bollinger Bands. I'm assuming that everybody understands these terms. And I don't have the chat window up here. Let's see. Where's the chat window? Because if you want to ask me any questions about, if you don't know what those mean. Chat. Well, I don't see it. Keltner channels. Those are really interesting. And Keltner channels are very much like my Sunny Bands, but they're not nearly as accurate. If you trade straight Keltner channel strategies, you end up losing money with it. But I trade Sunny Bands every single day, and it lets me know where the tops and where the bottoms are. It really does a good job of calling the tops and bottoms. This is a chart with simple moving averages on it, the blue one and the magenta one. And you can see that this, on the performance report, you can see that it makes 89, well, almost $90,000. 282 trades. It's only 37% profitable though. So that's really low, but the average trade is 343. Now I have another index that I put in trading, I think it's in 101 and trading 102 both, called my CPC index, and it's in some software. I know it's for sure it's in Build Alpha. What I do is I multiply the profit factor times the percentage, 0.3740, times the ratio right here of the average win to the average loss. If those three numbers multiplied together are 1.2 or greater, then I consider a system to be tradable. Anything below 1.2, I wouldn't trade it for anything. This is exponential moving averages, and you can see if you just trade the straight exponentials, you lose $49,000. So we don't need to know the rest of the statistics because we know we're losing $49,000 with those. This is Bollinger Bands, and you can see we've got a moving average in the center, and we've got bands that go to either side. If you trade the Bollinger Bands strategy that comes in TradeStation, you make $191,000, almost $192,000 with what have we got? 65% correct, which is really nice. Fewer trades at 96. But you can see 1.46 times 0.65 times 0.76. CPC index is still not high enough, even though it makes a good amount of money. It's not a robust strategy in my mind. This is a Keltner channel, which is closer to Sunny Bands. And like everything else, I've piecemealed things together. I've developed with my own mathematical abilities, and I've programmed things that do something that other strategies can't do. So Bollinger Bands doesn't tell me really, let's see if I can go back to it. The Bollinger Bands don't tell me where to get in. The rule I know is when they're squeezing together, you can expect a large move. You don't know in which direction, but you can expect a large move. You'll see in a minute that Sunny Bands really tells you where to get in and where to get out. If you don't want to buy Sunny Bands, we can go back to Keltner channels for a second. If you don't want to buy Sunny Bands, then you can always, I'll tell you how I trade Sunny Bands, and you can use Keltner channels. It's not as accurate, but it's a close second, I guess. So give me a call and I'll be happy to tell you that. These are my Sunny Bands, and you can see it's two moving averages this time, a gold and a purple one, and a cyan line and a green line on the upper side, and a cyan line and a green line on the lower side. Now, each of these, the cyan and green lines, are determined by 1.2 and 2.0 average true ranges above and below the dynamic moving average, which is my dynamic moving average is the gold and purple. The reason I call it dynamic is because I developed the math so that this would avoid whipsaw. I think I told you that earlier. And you can see it doesn't go in and out like most moving averages. It stays real steady with the moves of the market and lets you stay in for longer periods of time and avoids the whipsaw. You'll notice also that the upper bands and lower bands are programmed differently because they don't mirror each other. They are they're calculated based on which is on top, the gold or the purple. So they're added and subtracted from those two lines. For years, in fact, when I won the #1 trader awards, I used just the dynamic moving average. Let's go back to that. So you can see the gold and purple. All I was doing at that point in time was trading the crossover of this gold and purple. And that's how I got to be. I made 1 year, I made 365%, and 1 year I made 178%, which put me far and out beyond the next person below me. Okay, Keltner channels and Sunny Bands, yes, they are similar, but Sunny Bands is based on my DMA and Keltner Bands is not. They're based on exponential moving average, which have a lot of whipsaw, and they're not smooth at all. And Keltner channels, if you trade what's in TradeStation with it, has significant losses. So now that you've found your simple, you put Sunny Bands on the chart, you tailor the settings. Here are the settings that you can modify in Sunny Bands. And I don't need to go through all these inputs. I have so many slides today because there's so much I want you to know that I'm just going to pass right over those things. Oh, and I'm going to let you know also that I do have a 7-day free trial for anything that you see that you might want to try. Just email me or give me a call. This is a different band where I've taken the double bands off and I have only the ATRs at 2.0 average true ranges above and below the gold and purple. Here's 1.5. You see the difference, how that jumped? See 1.5. And the way I trade this, I don't know if you can see my mouse or not, but see how this goes up and it's going up and steady up, steady up, steady up. We have a red bar that's below, but the green didn't get out and then create a red. So we've got wait for another green and then a red, and then this red is the one that I would go short on. So that's how I trade Sunny Bands. Here's a 1.2 average true ranges and a 1.0. And you see it just gets tighter and tighter. And you can find out what works best by playing with that. And this is the 1.2 for the cyan line and 2.0 for the green line. Tells you some wonderful things. In the same color as the band, it gives you the value for that band. It tells you that the gold is on top in the DMA. The midline, which is the average of the gold and the purple, is 140. The difference between the inner bands, so if you wanted to go from here, oops, go back. If you wanted to go from the inner band to the upper interband. You want to know what the difference is there because you can see how many points are there for you to trade with. Oh, and this has something interesting on it too. I noticed this has sunny bars, which you can see have different widths. The bars are different widths, and that's totally dependent on the volume, as it shows right there. ABA, always be asking, what is true? What is happening? How far is the current market moving? And what happens when the band is touched? What happens if the DMA is moving sideways? Well, if the DMA is moving sideways, I either stay in the trade that I'm in, or if I'm not in a trade yet, I don't trade. Oh, which reminds me, let's go back one more time to go backwards. See this angle in gray equals 0.24? That's telling you how many degrees these bars are moving at. So if it's gray like that, it means basically that it's moving sideways. I'm sorry. Not the bars, the sunny bands. So if it's gray, they're moving sideways. If it's red, it's moving down. If it's green, it's moving up. So I like to name things and color code them to make my life easier. I don't want to have to be thinking while I'm trading. I've got enough on my hands without having to figure out all these things. So I color code and I put words up, and I even have a little indicator called current price that puts a dot exactly where the current price is, because I like candlesticks, but it's hard to see exactly where the movement is. So I have a little current price indicator. Now let's go back to this line. How far is it moving? What happens when it's touched? That's where we were, sideways. What happens if the 15-minute is signaling a short while the 1-minute signals a long? Now that's an important question. I do take my longer term signals from the daily chart and my trades from the 1-minute chart. So I want to know what is the overall trend of the market before I place a trade, because you don't want to be going long when the market's moving down. You can see over here the difference between, pardon me, these two bands. If there's only $1 move to be made between those bands, take it. You never go broke taking profits, right? Don't try to tell the market where to go. It's a friend of mine, Adrian Tograi, says it's intuition, not intuition. So you get to the place where you start wishing that trade's going to go up, and you're yelling at the market and you're waving your hands, and it's not listening to you. It's going to go where it's going to go. And the difference I just told you was, pardon me, was the difference between the inner bands and the outer bands. It tells me if the market goes up to the top band and then comes back down to the bottom band, how many points are in there? I need to know that. And that's just the same stuff. And this is sunny bands on the 1-minute charts. You can see how I've got red and green bars on the left, and I've got magenta and cyan bars on the right. That's because I made a little indicator. I keep programming indicators. This one tells me whether it's the regular session or the 24-hour session. So the magenta and cyan bars are because it's past 1:15 my time, Pacific time. I'm in California, if you didn't guess. So I can instantly, again, it's a color-coded thing. It's my thing to do that. And I can glance up and see whether the market's in the after session, which is kind of erratic, or if it's in the day session. Sunny bands on a 5-minute chart, same idea. Here's a 15-minute chart, and you can see Jody said the markets are fractal. It couldn't be more true. So I've had it on a 1-minute, a 5-minute, a 15. Here's a 30. Still works exactly the same way. So I take my signal from the longer and entry from the shorter time frame using sunny bands on both. Here I have something interesting. You can see on the inside, it's a little bit hard to see, but the darker green and darker teal is the sunny bands on a 1-minute chart. And the lighter green with the lighter cyan is 5-minute chart. So I've got bands over bands, and that's really cool because I can look at that and see how the longer term is being affected by the shorter term and vice versa. I can tell whether that's, I mean, like here, I just knew that this was coming right back to this DMA, and the DMA is flat there. Not a good time to be trading. So well, this was a little older here. I used to take my trading setups from the 15 and 30-minute charts. I do it actually on a daily chart now because I found that really dictates where the market is going. I also use a Vantage Point software, which it's artificial intelligence software that predicts where the market's going to go in the next 1 to 3 days. I found that very valuable. I always take a look at Vantage Point every morning before I start trading. So I enter long when the long-term chart is red or magenta and below the lower sunny band, and the short-term chart's red and below the lower sunny band. I take profit when the attractor is reached. Oh, what's an attractor, you say? Well, support and resistance are attractors. Moving averages are attractors. Horizontal lines of all kinds are attractors. Fibonacci lines are attractors. I call them all attractors because it groups them together and lets me know that the market is likely to move to that point. As you've heard of reversion to the mean, I'm sure, and that's what this is. It's an area on the chart that is attracting price to it. So I take profit when the attractors reached or the upper sunny band on the long-term chart is penetrated upward and then back downward. When the DMA, dynamic moving average, is long, the bias is to the upside. So don't expect a short trade to drop further than the midline. If the DMA is flat, stay with the first entry or the flat period or until the DMA finds a direction, or don't trade if you're not in a trade at that point. If I got a short signal, which will be the green or blue going up, turns to red below the band, and green or blue continues on up, I reverse and go long. This will likely be a strong move. Opposite is true for shorts. One of the things I still say to myself after 40 years of trading, I still say for myself, wait for it, wait for it, wait for it. I get anxious and excited and I want to jump the trade, especially for shorts. I love shorts, and it's really exciting because it moves so quickly down most of the time. But if the market's moving up, you don't want to be going shorts. You want to wait for proof. So you want the price to move in the expected direction, at least by a tick or two. And as Jody said, there's always another trade. I thought I actually predicted the crash of 1987 and made a whole lot of money that day on the Monday. And I thought, well, there's never going to be another time like that. This is the most amazing thing. And it's not true. We've had other crashes after that, and some bigger. Take your losses quickly. Do not sit in a trade holding on, wishing it would turn around. That's called an investor, not a trader. So here's an actual trading day. It's a 1-minute E-mini S&P. And you can see the matrix that shows exactly what price is doing. And so you can see it's moving there. Isn't that cool? Here's an example of a strong up move. You can see just left the center of the chart, it just goes up and up and up and up. And it just stays above the sunny bands and above that DMA line. When it does drop, like right here in the middle, it doesn't drop any further than the DMA line. Back up, back up, back up. And now it comes below the DMA line. I know that we're in a sideways period, we're in trouble. But I hold on until I get further information. Here's one that is interesting to see what this does. Again, it's got sunny bars on it. See, it goes up again. Now, what are we expecting? Well, we're expecting the move to go up to this attractor, which is the high of that previous bar. Uh-oh. Now it moves down a little bit, but it's an outside bar. And there we go. right back to the DMA. But you see it falls through the DMA, and then the next bar comes up a little bit more. So I'm still at that point, and the gold is on top. So I'm still expecting the market to move up. You can use sunny bars on any time frame. Just let's see if I can. No, that didn't do that. Okay, so I like it because I don't have to look at a chart of volume. Once again, I've got something right in front of me that displays it very quickly. Move up on high volume, move up on high volume, another high volume. That's telling you something. Session bars is, I showed you earlier. In this case, I've got them green and magenta. That's the 24-hour session. And then they turn, I always make my bars blue and green because they stand out well for me. And then you can see 6:30 in the morning, California time, opens the regular market. I already explained attractors, support and resistance. Pennants are also attractors, moving averages, congestion areas of any kind. And so I draw them, and then I set alerts on the lines that I draw so that TradeStation will beep me and tell me that my line has been penetrated. Here is, this is yesterday's chart, and you can see 1, 2, 3 attractors that I've drawn. And you see that over here to the left on this line, we've got it. It hits the line there, it hits the line there. That was when I drew the line. I dropped it from those two. Here it hits it again, it hits it again. We've got congestion at it again. And then when it penetrates it over here, it moves down sharply. Here they are on a daily chart. Attractors, horizontal lines at areas of congestion or significant highs and lows. There are two things on this chart that we need to talk about. One is pennants. You can see I've got 2 red lines, and in the center of those 2 red lines is a little triangle. And this shows that there's congestion in this area. It's a pennant formed by price. And I have found that if you buy when the price exceeds the upper red line, or sell when the price exceeds the lower red line, it works really well. The other thing on this chart is Fibonacci retracements. I love to keep Fibonacci retracements on my chart. It makes life easy. And you can see from this one, here's the Dow of, is this the Dow? Yes, of yesterday. And it looks to me like we're going pretty quickly up to 33,612. That's the 38.20% retracement extension, actually. And it works just as well on the monthly. And I have another indicator. I took the standard RSI, which jerks all over the place, and I used the same smoothing algorithm that I have in my DMA, and I've smoothed the RSI so it flows much more nicely. It's not constantly jerking around and moving up and down, up and down. It smooths it out so you can tell. And I use Carolyn Brown's 60/40 for my horizontal lines. So if it's over 60, we're overbought. If it's under 40, we're oversold. This is a cool program called Advanced Get. It's from eSignal, and you can see it numbers the Elliott waves automatically for you. This is really nice, and it puts Fibonacci on there too. This is my website currently. I'm completely reprogramming it, and it's going to take me a couple more months to get this done. But if you click on this shopping cart over here, you'll be able to see what products I have available. And there's just lots and lots and lots of links to all kinds of things. If I want to make a color in TradeStation, I just go down to Research, Reference, and click on the color chart, and I immediately get the RGB color codes for any color that I want. And don't forget, TradeStation Made Easy. This 744-page book leads you through everything you need to know to trade with TradeStation and easy language. So this is my current Money Mentor, which is an old Frames version. And this is the new one. This is the way it's going to look from now for a while. I don't know how long before I reprogram it again, but this is what it's going to look like. You can email me anytime at sunny@moneymentor.com. If you want to be included on the press release when I announce the new Money Mentor, just send me your email address and your name, and I'll send you an email when I get it finished. So that's it in a nutshell. I didn't think I could get through 90 slides in 50 minutes, but it looks like I have. So if you're interested in consulting or tutoring, give me a call or Skype me at Sunny J. Harris, or here's my fax number, and there's my email address, sunny@moneymentor.com. And please visit my website. And don't be afraid to call. I love to talk to other traders, especially new traders who would like to learn, all kinds of stuff. I've read, what have I read? 342 books on trading now. So I kind of know the content of most of them. If you've got questions, I'll love to talk to you. So now is the time for your questions. Oh, no, not quite. Sorry. If you attended this seminar, I offer the following: 30% off of everything I've got except the books. So until the end of this month, 30% off. You've got enough time to if you have TradeStation or multi-charts, to get a trial, 7-day trial of anything you want, and play with it and use it. And I will teach you how to use it for free. We'll have either a Zoom call or a telephone call, and you have plenty of time to try it and see if you like it before you buy it, and then get that 30% off value. That's an amazing price off. I don't offer that anymore. Okay, now then, I'm going to see if I can bring up that chat. There's the chat. How do I track and incorporate volume? Yes, I think I answered that. I do it with Sunny bars because the bars are wider with higher volume, narrower with low volume. And the ATR, average true range, is already built into my Sunny bands and my dynamic moving average. So I use them that way. Let's see, let's go back and get some of these. That's Jody's. Very interesting PHW concept. Yeah. It's just, I program things that I just am interested in, and things that I need for my own trading. And I make those available to other people. It's all done. I'm not like one of the vendors who sells software but doesn't trade. My main income source is trading. And by the way, the things that I use for trading, I make available to others. Moneymentor.com. Said that. How do you, oh, I already said that. Thanks for your time. Can your strategies, I think it means be automated for an algorithm? All of them can, except for Sunny Bands. And I paid $10,000 to a programmer to try to get Sunny Bands programmed, and he couldn't do it. So a lot of Sunny Bands is learning to use it, watching it. And Adrienne used to tell me that I was the most intuitive trader she knew. And I said, no, I'm the most systematic trader. I'm not intuitive, I'm systematic. But then I found out over years I am very intuitive. And I just like when you shoot baskets, and you shoot and you shoot and you shoot, and then one day your muscles just know it. It's muscle memory. So the same is true of trading. You watch Sunny Bands for a few weeks, and all of a sudden you know what to do next. And I'll be happy to walk you through that if anybody's interested in Sunny Bands. I have several clients that have been using Sunny Bands for a long time. One guy, if you go to my website and click on quips and quotes or quips, you'll see what people have written to me over the years in response to my products and my tutoring and those things. Excuse me, I have to take a drink of water. If you click on quips, you can see that Don says he started out with a $25,000 account, and using Sunny Bands, he has over $1 million. I think he said $1.5 million. $1.25 million or $1.5 million in his trading account now. I trade futures all the time. I trade the E-mini, and that's a futures contract, but I do not trade options. I found very early on in my trading that I can lose lots of money trading options, $2,000 at a time, over and over and over again. So Larry Williams and I were having lunch one day, and he says, "You surely understand how to trade options. You're a mathematician, right?" And I said, "No, I've never figured it out. It doesn't work for me." So I stick to the things I know. Stocks, long term, and I trade the E-mini futures contract, short term. Do you trade different E-minis or? Oh no, I just trade the S&P. S&P 500 E-mini. You want the continuous contract? It's at ES. Just joining in, the screen is black. Who's speaking? It's Sunny Harris over here. Screen's black because I'm just the speech is over and I'm just now answering questions. Thank you, Mike. All right, if there aren't any more questions, then I will leave you to the rest of the speakers. I very much appreciate your time. Thank you for attending. And I hope that I've answered some questions and created some others. So give me a call. I'd love to talk to you. Thank you very much. Thank you, David.